You must have seen so many news articles on your social media feed with terms like cryptocurrency, Bitcoin, Dogecoin, bear markets, and bull markets. You might already know about Bitcoin and cryptocurrencies, but if some don't make sense as to why financial markets are named after animals, we can start by discussing that. Welcome back to CryptoGeeks. In today's video, we'll be looking into bear markets and bull markets in terms of cryptocurrencies. But before we get started, make sure to smash that subscribe button for your chance to win our monthly giveaway. Just comment down below "I subbed" and you'll be entered in the crypto giveaway. Check our About to find out what this month's giveaway is. Let's get started. You can find the cryptocurrency market being described in the news as either a bull market or as a bear market. These terms are not only used to refer to cryptocurrency markets but also stocks, real estate, or any other assets for that matter. To keep things simple, bull market refers to a rising market and a bear market refers to a declining market. We use these terms because the prices of cryptocurrencies are highly volatile, which means the prices don't remain the same even throughout the day. But these terms are generally used to describe more extended periods of mostly upward or downward movement of the market, and also a significant upward or downward trend over a short time. So yeah, bear markets and bull markets have got nothing to do with animals, but it is used to describe the current market sentiments. For those of you who don't know, market sentiment is a strategy used by a few investors to determine the optimism of the investor in any given market, because the prices are influenced by public confidence in that asset, and there is no intrinsic value for cryptocurrencies, which means the asset is not backed up by any physical asset like gold. The origins of these terms are not clear, and that's the case with most financial terms. But most people are of the opinion that the markets got these names because of the way of how these animals attack. Bulls thrust their horns upwards during an attack, and bears swipe downwards with their claws. This is one of the many theories floating around, and we believe this could be the best one out there. Let's now dig a little deeper into what these terms mean and how you can identify a bull or a bear market. We will start positively with the bull market. To elaborate on what we mentioned earlier, a bull market is where the condition of a financial market is rising or will rise in the near future. The term was initially used to refer to the stock market, but now things have changed, and the term is now used to describe other markets as well. Bull market sentiments exist as a result of the expectations, optimism, and confidence of the investors that brings more investors to invest in the asset, and this will drive up the prices. Any positive news surrounding cryptocurrencies typically results in what we call a bull run. You can identify a bull run when you see prices quickly going upwards in any given moment. This means that investors are optimistic or bullish about the prices being much higher in the future than what it is right now. You can, however, still expect corrections, dips, and fluctuations in bull markets. Much like what's happening in the crypto market today, where some experts think we're at the beginning of a new bear market, while other experts say we're still in the midst of the 2020 bull market and simply correcting. So if you're new to investing in cryptocurrency, there are chances that you'll mistake these short but sharp downward movements as the end of the bull run, which will force you to strategy out there if you're planning to invest long term. These dips in prices can be used to acquire more of the asset that you're holding if you can figure out whether the market sentiment is bullish or bearish. That being said, you also need to keep in mind that bull markets don't last forever, and there can be chances that investors will lose their confidence and motivation to invest in the asset. This can be triggered when the prices start to fall slightly or a piece of important news from a big company, just like the announcement from Elon Musk on Twitter that Tesla will not be moving forward with Bitcoin payments, or the interference of the government by implementing a ban or penalty for crypto mining and crypto trading. Investors also lose confidence when the retail investors they looked up to when investing in these assets also gave up on the asset. The best way for you to invest in a bull market is to take advantage of the rising prices much earlier and then sell it off once you feel the prices won't go any further. In the case of cryptocurrencies like Bitcoin, it's good to sell a few and hold the rest as an investment so that when the prices rise even further, you can sell it then. Also, in a bull market, the chances of you losing your money are significantly less if the prices are increasing after you purchased your asset. But the same cannot be told about the bear market, so it's now time to discuss in detail what a bear market means. Bear markets are the period of time in a market where the supply is greater than demand, where the number of investors trying to sell will be much higher than the number of investors holding the asset. This happens because the confidence of the investors in the asset is coming down, and there could be any major news against the asset that will force investors to sell, as we mentioned earlier. So, the optimistic investors who believe that the prices will go high are called the bulls, and the pessimistic investors who tend to believe the prices will fall are called the bears. The best strategy in a bear market is to hold the asset if you think that in the future the prices will increase further and you can make a profit in the long term. This will only be applicable to the investors who've already invested in the asset for obvious reasons. But let's say you were held back from investing in Bitcoin, for example. Because of the high prices of Bitcoin, then buying at the lower prices is the best option for you if you think that the prices will go up again in the future. Just like a bull market, the bear market is also very hard to predict. The bear market of 2018 to 2020 can show it, as some assets lost 95% of their value since their all-time highs of the 2017 bull run. A sharp downwards price movement usually shows the sign of a bear market, where more and more investors believe that the prices will continue to fall, causing a downward spiral as they sell in order to prevent further losses. So, if your investment strategy is a long-term one, then a bear market is the perfect time to invest in your assets because it might pay off in the future when the market shows bullish sentiments again. It's hard to predict the market changes unless and until something significant happens out of nowhere. In the case of Bitcoin, the prices skyrocketed when large companies started to invest in Bitcoin, and also because of the investment of institutional investors. We also have Elon Musk frequently tweeting about Dogecoin, and that drove up the prices of Dogecoin, and now it's among the top 10 cryptocurrencies worldwide. Elon Musk also tweeted about Bitcoin several times, and earlier this year, his company also made investments in Bitcoin. But on the 13th of May this year, Elon tweeted that the company will no longer be accepting payments in Bitcoin due to environmental reasons. Bitcoin requires a lot of electricity to run, and that's a serious issue. This was one of the major events that led to the Bitcoin crash. To sum up, loss and profit are part of any investment, and it's not just something that's limited to cryptocurrencies only. But you need to keep in mind that cryptocurrencies are extremely volatile assets. There's a high risk involved, and there are chances that you'll make high returns as well. When investing in cryptocurrencies, make sure you only invest the money you're willing to lose, and also invest in assets that you understand well. Before making any investment decision, you should understand whether the market's currently a bull market or a bear market. If you're looking to diversify your portfolio, then buying the assets during a bear market will make a lot of sense if you know that the future is going to be bright for your asset. With that, we've come to the end of our video. What do you think about the current trend in the cryptocurrency market? Do let us know in the comments section below. In case you're not subscribed to the channel, now is the right time to do it, as we have more content like this for you coming up. Also, don't forget to press the bell icon to get notified about our future uploads. Drop a like for the video as well. Catch you all in the next video.